Have you ever felt like your business is a runaway train with cash flying out the window faster than it's coming in? If so, you're not alone. Did you know that a staggering 82% of small businesses fail due to poor cash flow management? That's right, it's not a lack of profit, but a lack of cash that often spells disaster. Welcome to Dollars and Dreams, the podcast designed to empower you to take control of your personal and business finance. You know, the very thought of money and finance can often send chills down your spine and stir up fear of the unknown. But let's change that narrative together. Through this podcast, my goal is to not only to provide you with useful information, but also to inspire and motivate you to take action towards your own financial goals. Let's rewrite your money story together. Hello and welcome to today's episode of Dollars and Dreams. Today's episode is something that I find most small businesses don't really get a full grasp of. They know that they need to look at their bank account to work out what money they've got, and they know that they need to be conscious of what's coming in and what's coming out. But 82% of small businesses fail because they don't have cash flow management in place. We're constantly looking at our profit and loss and not looking at our cash flow. And of course, cash flow is the ins and outs of money of your business. So what money's coming into your bank account and what money is going out of your bank account. And look, it can be a roller coaster ride for small businesses. There'll be months where they get lots of sales, money turns around really quickly and is in their bank account. Then there'll be months where money just seems to be flying out the door. And as small businesses, we need to know that there is a roller coaster that we ride when it comes to cash flow, but there is ways to level that out, and that's through obviously budgeting and making sure that we keep it level as much as we can. But the exhilarating and the thrilling ride of the highs, and then you have that stomach churning lows of cash, can be really difficult to keep yourself motivated in business and to keep yourself ticking along and wanting to keep rocking up to your business every day. Particularly if your business is in the process of scaling, whether you've made a conscious decision to scale or whether it is just scaling by default, there can be a really big pressure on your cash flow. One of the things that we always say to small business owners, particularly because larger businesses and medium-sized businesses will have procedures in place and they have staff to do it. But a lot of small businesses are doing this on top of what they do on a day-to-day basis. But it is important to make sure that you keep on top of your accounts receivable. So accounts receivable is where you have invoiced a client and they haven't paid you yet. So it's money that is owed to you for goods or services that you have already delivered, or even if you're taking a down payment for something. Keeping on top of your accounts receivable is really important, because if they start to blow out, you've bought whatever it is that you're selling, whether that be a product or time, but you've paid for it. Your consumer has now not paid you for it. So you are funding their business or their lifestyle. So it is important that you have really strict terms of trade, that you keep on top of your terms of trade. And if you're using accounting software for real-time accounting, a lot of the software invoicing system will let you send an invoice as a reminder, hey, just letting you know that your account is due in 3 days. If you have already paid it, please accept our thanks. If not, we appreciate payment by the due date. That then is a trigger to your consumer to make sure they pay it. And sometimes our consumers just forget to pay. It's not always they haven't got the money or they're deliberately keeping payment aside, but quite often we just get busy with our lives and people forget to pay. So that reminder, if you're using real-time accounting software, is a great way to get your consumer to pay on time. The other thing that the real-time accounting software does is you can set it up that if it's not paid on the due date, the next day it sends a reminder. And then maybe 3 days later, it sends another reminder. If you haven't received it after that short period of time, it's probably worthwhile picking up the phone to see if there's an issue, finding out if you can put something in place so they make part payments until it's done, because nothing will put a bigger pressure on you cash flow wise than paying for something that you are not recovering from your consumer. So if, for example, here in my business, I pay for software, I pay for rent, I pay for all these other things that allow me and my staff to serve my clients. A lot of people will say to me, oh, gee, I wish I had that hourly rate. And that hourly rate's not what we get paid. It's the hourly rate that we need to collect to cover our fixed costs as well as our cost of producing whatever it is that we produce, which can be financial statements, tax returns, it can be a mortgage, it can be financial advice, any of those sorts of things. So the cost that we do on an hourly rate is to cover all of those things. So if I've paid my staff to do somebody's financial advice and we've come up with a strategy and that person doesn't pay me, I've lost potentially, I could have had my staff working on somebody else. I've paid their wages, their super, their sick leave, their annual leave that is part of their employment costs. I've also paid all the insurances, I've paid rent, I've paid electricity, I've paid everything that I need to spend to produce something for my client. So if they choose not to pay me on time, I'm subsidizing it out of my bank account because I've paid my staff, I've paid my rent, I've paid my electricity. So it is important that that negative cash flow that comes by producing whatever it is you sell is returned to you quickly in the positive cash flow in. So that avoids the roller coaster because nobody wants to have it that we are spending all the money and waiting months and months. So if you're in the building construction industry, you would have part payments. Don't do any more work till you get your part payment. You would have a payment before you even start working for somebody. If you're a product-based business and you've got terms of 7 days and they choose to pay you in 21 days, you have been a short-term lender for 14 days because you have lent them money from day 7 to day 21 when they choose to pay you. Now, whilst you're being a short-term lender, not charging interest to your consumer for that 14 days, not only that, you're potentially paying interest on a line of credit that you may have in your own business. So it's important that you are very strict with your inflows and your outflows when you're a business so that you don't ride that roller coaster of the cash flow chaos. It also means that you've got money there to invest in your business, to look at opportunities for growth for your own business, and of course to pay your staff and buy your own product. The other thing that we find a lot of our small business clients do is that they will look at profit and assume that that is cash. So your profit and loss statement, I've said it in lots of podcasts and I'll say it again and I'll keep saying it. Your profit and loss is not your cash flow. It does not get represented by your bank account. And as accountants, we have done a disservice to our clients by focusing on the profit and loss. People look at that because they're always concerned about their tax. That is only part of the story. As a good business owner, you should be looking at your profit and loss, no doubt about it. You should be looking at your balance sheet to see whether your assets are more than your liabilities. So that's things that you own compared to what you owe. You should be doing a budget to make sure that you know what you've got coming in the next 12 months and can predict any cash flow issues and put things in place for it. You definitely should be doing your business plan and your marketing plan. So there is so much that you need to do that this is part of removing the stress from your life. Removing the cash flow issues lets you focus on all of the other things as a business owner that you need to do. So don't look at your profit and loss. And as I said, we as accountants have drilled our client to looking at that because tax is based on your profit and loss. It is part of the story, no doubt about it, and you do need to look at that, but you need to look at things like your gross profit margin. So has your cost to deliver the product gone up or down? You obviously want to make your gross profit margin higher, because if you can get a better profit margin from selling your product, you have more money left over to pay your fixed costs that aren't influenced by sales. So for me, that's things like rent, electricity, telephone, software that we buy. The cost to produce the product is my wages and our tax software. So be very careful that you want your gross profit margin percentage to be as high as you possibly can. That then means that you should have more cash available to cover those costs. But if your sales are not being collected from your consumer, your profit and loss is not relevant because that sale hasn't come into your bank account. So just focusing on your profit and loss means that you will forget about what's on your balance sheet, which is the accounts receivable or money that's owed to you, the debts that you owe to your suppliers or even to the tax office, your lenders. So let's say you've borrowed money to invest in your business, that will show on your balance sheet. So focusing on one part of your financial statements can be to the detriment of your business, because businesses that are profitable don't necessarily have cash flow. So they can have what we call the cash flow crunch. So they've spent money to buy the product in that they do, or the goods that they need to manufacture what they do. They've put the bill out. It shows that they've made a profit because let's say they've billed their consumer $100,000 and their costs were only $60,000. That will show that they've got a $40,000 profit. But if your consumer hasn't paid you in full, you're potentially a negative $60,000 in your cash flow because you've spent $60,000 to produce what it is that you've sold and not collected the money. So a profitable business doesn't mean you've got a positive cash flow business, because if you have not collected your income that you're owed, or you've paid out more in the product that you've bought, that will have an impact. So it's important that you look at your cash flow. So look at the money coming in and out of the bank account. Make sure you keep on top of your accounts receivable, which then gives you the ability to pay your accounts payable, so money that you owe other people, in a more timely manner, which can sometimes give you better terms of trade, can give you discounts because you've paid on time. So look at strategies to collect your accounts receivable in a timely manner. Look at strategies to keep control of your business, and that can be, as I said, the real-time accounting, sending reminders to your clients. But if the emails haven't worked, pick up the phone and find out why they haven't paid you. And it could be that they've got cash flow issues, but you are far better off to know that. Put something in place that they can negotiate, because a lot of people will automatically think that I can't pay it in full, so I won't do anything. Whereas you could say to them, well, let's put something in place and you can pay a third this week, a third next month, and a third the week after, because you're better off to collect some than nothing. It also means that if you have spoken to them, you can tell them that you're not going to supply anything more until they catch up, because you are not there to support your business. You are there to support your own business so that your business can give you what you want in life. Keep on top of your accounts payable, because a lot of people say to me, I don't have to worry about that because if I'm not paying them, it doesn't matter. Before long, it can balloon, and it's a spiraling system that if you stop paying your suppliers, they may give you unfavourable terms because they're taking a long time to collect their money. It can also mean that your debts are building up and you are then putting greater pressure on every bit of income that comes in. So cash flow is the vampire that sucks the life out of your business. It's the thing that will send you under quicker than anything. And there's a statistic around business research that after 10 years, even profitable businesses, 70% of them have stopped trading. And it can be that the cash flow issues, as I said, it can be that the financial strain of business. Sometimes people get to there and they go, it's just not worth it, me trying to do this. And this is what I'm trying to teach small business owners like you through this podcast and through my teachings on my jenrichardson.co, is that being in business doesn't have to be hard if you put systems and procedures in place. A business should be there to give you the 3 freedoms, and I've got a podcast coming up on that in the next couple of weeks about, your time freedom, your mind freedom, but also your financial freedom. And they are 3 parts that need to work together. A lot of small businesses will have financial freedom, but they don't have time or mind freedom. So it still becomes overwhelming. And of course, if you can remove cash flow issues from your life, that will give you the financial freedom, but quite often give you the mind freedom. And it will also give you the time freedom, because a lot of people, when they're struggling cash flow wise in their business, they will quite often stop using staff and do more work themselves, because they look at it and they go, well, I've got a bit of a pressure. I'm not going to have enough for pay wages next week, so I'll jump in on Saturday and Sunday and get that work done. It doesn't work that way, because then that does not give you time freedom. It's about being aware of your cash flow and what's lurking in the shadows of your business. Is it poor pricing? Is it because you've got poor control over your inventory? Are you not billing people for work that's being done? We call that scope creep in the accounting world. So we do a lot with our clients, we do what we call a monthly retainer. And so we work out what services we're going to provide by the year, what the cost of those will be, and we divide it by 12, which helps with cash flow for people, because instead of getting our bill in, August or September for the whole year, they can spread it out. But in doing that, we need to be very careful that we don't have what is called scope creep. So if we've decided that we're doing services 1, 2, 3, 4, and 5 for a client, if they ring us up and say, oh, I need you to do this, if that doesn't fall into one of those 5 services, we need to obviously bill our client, because that was not factored in to our quote for the year. So if you're a builder and the person that you're working for says, oh, look, while you're here, can you just hang that door? And it takes you half a day, be prepared to issue an invoice. If you're a hairdresser and they're sitting there and they say at the end they want to, just a wash, a cut and a blow dry. And in the end they go, actually, do you mind if you just curl my hair? So you've already blow dried it and then you do that. Be very careful that you have done an additional service over and above what you're billing for. You don't go to a shop and say, I don't have to pay for these bananas because I bought bananas last week. So be very careful. And it's one of the things that we see in a lot of small businesses, because there is an expectation that we will do more for less. And I do also have a podcast coming up, I think it's in about 6 weeks' time, on this very topic about making sure that you're paid for what you have done, or learning the word no. So what we do here, and it's what we encourage all of our clients to do, if a client rings us and says, oh, can you just do this for me? We'll just say, yeah, that's great. Happy to do that for you. But it falls out of our quote and our scope. Are you happy to pay whatever the costs are? This is what we estimate it'll be. Most people, if you tell them up front, will say, yeah, of course, you're doing extra work and, I understand that you've got to do that. The person that says, but I pay you monthly, why do I have to pay to do that? They're probably not your ideal client. You haven't educated them on what they've engaged you for and what services are going to be provided. And that, whilst I'm using an example of my office here, is the same in any business. If you're a builder, if you're a plumber, if you're a painter, and, they wanted the house painted and they just said, can you paint the outside of the house? And you don't class, I don't know, not a painter. Let's say the architrave's on the door going into the house. You don't class that because it's inside the house. They may say to you, but I thought you were going to do that. So it's about being very specific in what you scope out with your business to stop that cash flow issue. It's also about being very upfront with people of when there's an expectation to pay and there is an expectation of potentially increases. So if you're a builder, for example, and we've all heard all the builders that have been going under of late because they haven't had a clause in their contract to say that if cost of goods go up, because most building contracts go for a long time, or you might quote a job today and you don't start their work for another 18 months because that's where it fits in. You don't want to get caught if materials go up in the 18 months. So you need to be able to have that contract clause that allows you to collect the additional income that it's costing you so that you don't ride that cash flow roller coaster. The other thing to consider with your cash flow is be very careful of expansion. So growth isn't always good, and I'm not saying that you shouldn't scale your business and you shouldn't grow your business, but you need to have things in place in order to make sure that you can achieve your cash flow in order to do that. You don't want to start growing and realize that all of a sudden you've taken on extra staff, you've moved to bigger premises, you've moved to having to go up in your level of insurances, or you've had to buy extra material, but you haven't passed that on to your consumer. So be very careful about your cash flow when you start to grow, because that can be really restrictive. It's where people don't look at their growing and understand that they're actually growing. And we see this with small businesses all the time when we look at them and we go, well, your gross profit margin has decreased. What is different? They go, had to get another supplier because the other one couldn't give us our stock quick enough to achieve what we needed to achieve. But you haven't taken that into account with your cash flow. So growth can be good, but it can be good when you have planned for it. So it is important that you don't accidentally grow and not take into account the additional costs that come with that. So sitting down and doing your planning, learning to say no to that growth until you're ready to grow, because remember, your business is about you. It is not about anybody else. And growing your business is okay as long as you are prepared for it and you have built out the cash flow that you may need for that growth. Because nothing will make you doubt yourself as to whether your business is still right for you, or it's still growing, or it's still profitable, or it's still what you need in your life, than if you have cash flow shortages. Because you'll look at this and you go, I'm working harder, I've got more contracts, I've got more people to worry about, I've got more business to sort, I've got so much more, but I'm actually making less, or I've now had to go and get a loan because I can't afford the wages next week, or I can't afford to pay the supplier. That is about you not thinking about your cash flow and looking at where it is. So you'll hear the mantra sometimes, particularly in social media, or people that have not been involved in growing businesses or have grown their own business, is grow at all costs. The quicker you grow, the quicker you scale, the more money you'll have, the more profit you'll have, the better life you'll have. Block out the noise. It is not always the case. And it is a great little song for people that are trying to sell you something. So if it's a marketing company that's wanting you to buy their marketing course, or a business growth specialist who's never actually grown a business but wanting to get likes on social media or followers on social media, they're telling you what you want to hear. We all want to hear that if we grow our business at all costs and you take this course, you'll grow, you'll be much better, you'll have double the revenue in 12 months and you're going to be living the life that you want. You can do that, but only if you've put all the systems, procedures in place and planned for it. So make sure that you're not following that growth at all costs is the answer to all your questions without looking at your cash flow. Otherwise, you'll end up in this massive cash flow nightmare that you will struggle to survive from. And it's where we see a lot of small businesses using money that's not theirs, so tax office money, so where you've withheld wages from people's you've withheld the tax from people's wages that needs to be passed on to the tax office, or you're keeping the GST that should be going to the tax office and you're using that in your own business. And then when you need to pass that on to the tax office, you don't have the money there. And the pressure of paying tax is one of the greatest things that we see with small businesses, because they never look at that money in the bank account as not being theirs. And they do take that approach that, I hate having to pay all this tax to the tax office. Well, it's not tax, it's somebody else's money you're paying. It's your employees' tax that's been withheld from their wages. It's the GST that you collected on behalf of the government. It was on top of your sale price. It was never yours. The tax that you pay on your income or your profits is definitely a tax that you need to pay, but that is only ever a percentage of your profit. So if you don't have that money set aside, again, that's a budgeting issue, and it is about understanding with your business what you need to set aside and put in reserves for your business to be able to do what it needs to do. And so that's about creating different bank accounts. It's about creating the knowledge of what's yours and what's not yours. And it's about not using money that is not yours. So if that money needs to go to the tax office at the end of the month, you can't use it to manage your business and prop up your cash flow issue, because it's not your money. And then when you've got to pay it to the tax office, you are going to have a cash flow issue, which means then you'll put pressure on your other expenses. You'll turn to short-term debt or cash flow debt. You'll have opportunities to grow stifled. You'll have not be able to pay your suppliers, so you might not be able to get your product in, which means that your consumer will get annoyed that you're not meeting your service standard with them. And it just becomes a spiral. And I always say it's like watching somebody circle the drain, just waiting to slip down it. So cash flow projections are the key to everything, along with creating a budget for your business and getting control of your costs and your income. So with your cash flow, please stop looking at your bank account. Please stop looking at your profit and loss. Start looking at things like, are my debtors paying on time? Am I reducing my debtors? Have I got a better profit margin? Am I paying my suppliers in time? Have I set money aside? Those things will automatically flow into good cash flow management for you. And it is important to forecast. If you're just trying to do your cash flow on a day-to-day basis, we see everybody that, I've got wages due next Friday, I've got to collect this, and then you're running around like a little rat on a hamster wheel trying to collect money quickly for wages. But then what incurs between now and when the wages are paid is whatever costs you're incurring there, you're not catching up with as well. So you're on this hamster wheel of looking what needs to be paid soon, trying to collect the money so that you've got it, trying to put money aside for things like that. Cash flow issue is a consequence of a couple of things. As I said earlier, your receivables not getting collected on time or being collected out of scope, so doing extra work that you're not billing for, or not having control of what needs to be paid. So once you get all of those systems and procedures in place, so I talked about a plan, a budget, a cash flow forecast, looking at your pricing model and looking at your expenses, then you will have far better control over your money. Once you have control over your cash flow and your money, it will then give you those three freedoms. Because if you've got good cash flow, you're not stressing about business. You might still be stressing about, potentially can you service all the clients you've got, but that's a factor of forecasting your workforce. You might have stress about growing too quickly, but again, That's you taking control of your business and realizing that it's there for you to control, not for your consumer to control. Learn the word no. And don't think that you have to grow your business because everybody tells you to grow your business. So my takeaways from here is make sure you're doing those things with your small business. They are part of you being your own business's CEO. And that is part of what you do when you start a business. Look for some quick wins on your cash flow. Look at increasing your pricing. If your costs have gone up, you need to put your pricing up. That will give you a positive cash flow. Keep on top of your accounts receivable or your debtors to make sure that there's not something happening in the background where they're not going to pay because they're going under. You are not there to subsidize their business. You are there to make your business work for you. And of course, if you put all of those things in place to make sure that you've got money set aside for tax bills, money set aside for the government levies and things that you may have to pay. Also, make sure you set aside what I call an emergency fund or an OMG fund when I'm working with people on an individual basis, because machines will break down. Staff will get sick, staff have got long service leave, you might need to get temps in. There's lots of things that can go wrong. There will always be something that happens in a business to put pressure on your cash reserves. So make sure you've got that emergency fund sitting there so that you don't turn to short-term debt, which will then put pressure on your cash flow as well, because you'll be trying to pay off a debt as well as then trying to get money back into bank accounts. Make sure that you don't get caught by what we call the shiny object syndrome. And that's where you jump from one thing to another because you're after that quick win. The shiny object syndrome is in our social media all the time. If you do this in your business, you'll have this. So you pivot to go, I need money. I'll do that. And all of a sudden I'm going to have the 7 figures that they're telling me. Stay focused on what you do and how you're doing your business. Reach out to people that can help you. Educate yourself through platforms like I have at jenrichardson.co in my Business Growth Academy. My Pathways to Profit course shows you how to do all those things that I just talked about. I'll give you all the tools and templates that you need. But take advice from people who are trained in the area, not from finfluencers, not from people that have got 100,000 followers on social media because they've told you what you want to hear. You need somebody that can look at your business and work out what it does, or educate you in how to do that for your own business. Sometimes you might need to get one-on-one advice from your accountant, financial advisor, or somebody to get you out of where you are. Don't be afraid of spending money with people to help you, because it can be a game changer to stop you feeling the stress, stop you circling the drain, as I talked about earlier. So educate yourself, come up with strategies on how to make sure that you've got money sitting aside for an emergency, or money sitting there to pay bills as and when they're due. So what are my actionable steps out of the podcast? I want you to look at your invoicing. So as soon as you've finished a job, invoice straight away. People are more likely to pay you quickly when they have just been delivered the goods or service. If you send them a bill, a month, 6 weeks, 2 months later, they've forgotten how you improved their life or how you solved a problem that they had, or you gave them something that they needed. So billing immediately and quickly is the easiest way to get your consumer to pay you. Give them options to pay. It can be transfers to your bank account, but make sure they're all listed. If it can be a link to something like a platform like Square or one of those payment platforms, so they can just get the invoice, click on the box, and it goes through to their credit card or direct payment. Be very clear on your payment terms and be concise so that there's no doubt, no different ways to view what your payment terms are. Specify the actual due date. One of the things that I see is people will send an invoice that says invoice due 7 days. but the person opens the invoice because it came into their mailbox, went to their spam, might have gone through the old snail mail system. You're looking at it 7 days from today. They opened that invoice in 5 days. From their perception, it's 7 days from there. So be very clear with the date it's due, not just our terms of trade are 7 days. And I've got one, I don't even know who it is now, but I've got somebody that sends us a bill and it says terms are set 30 days. I'm never sure whether that means it's due on the 30th of the month or I got it and it's due 30 days there. I really dislike that invoice when I get it. I'm never quite sure. And it puts me in doubt. Do I pay it now? Do I pay it in 30 days? Am I going to get bad terms with this one? So be very clear with what payments are accepted as well. You know, if you don't want to accept credit card payments, then put that on there. Don't be shy about following up an invoice. So if somebody hasn't paid you, you need to follow them up. And I always say to our business clients, if you're an employee and your employer didn't put your wages into your bank account on the Thursday that they were due, you would call them straight away. Why is it that because as a business owner, we think that we have to be lenient when an employee doesn't have to be? Why is that? And that is the thing that I say to them. These are your wages. As a business owner, the buck stops with you. So everybody else gets paid, everything else gets paid, and it's left to you to collect your money. So treat your customers as your wages. If they have not paid you on that date, call them up and ask them why they haven't paid. Exactly the same way as one of your employees would walk in and go, hey, my pay didn't go in today. Why is that? Don't be afraid to negotiate with suppliers. A lot of suppliers will give you favourable terms if you pay within a shorter period. So take up that. Look at ways that you can reduce your cost to your suppliers. So if there's a reduction there, that's going to impact your cash flow in a positive way because you're not paying out as much money. Always scrutinize your expenses. Is it an expense that you keep paying because it's just there and it rolls? And of course, we all know that when we sign up for anything, they always want your bank accounts or your credit card details so it can roll your subscription. That means that we get particularly lazy because it just comes out. You don't have to think about it. But if you got that insurance bill and it didn't roll, they'll tell you that they've done it to make sure that you're covered and your insurance policy stays in place. That's not the case. They want to make sure that you roll and keep with them. So they're all the same. You know, we have it with our software suppliers. It's all a monthly subscription and I see it tick up every month. And I am at the point that every time I see something come on my credit card, I question, is this something that we still need? Do I still need this subscription? And in the last month, I think I've got rid of 2 subscriptions that we found an alternative way to do what they did. Don't be afraid to upsell your clients. You know, McDonald's has been the expert in this. Apple do it really well because they've changed what they do with their plugs. So you got to buy a new plug. McDonald's used to have the, did you want fries with that? So don't be afraid to upsell to your client as long as it's not salesy and it's not sleazy. Do not sell for the sake of selling. Sell if they could get something out of whatever it is. So it might be something that you can see that they need or something that everybody else has purchased that has worked well with this product that they've bought. Your consumer will be very grateful if you give them something that serves them or their purpose better. They will not be happy if you sold them something for the sake of selling. Consider prepayments. So if you're going to supply something to somebody, you know, builders do this really well because they've got to buy materials, so they get an upfront payment before they start. There is no reason that you can't do this. We do it here as an accounting practice to any new clients because we don't know what they're like as a payment provider. We don't want to do all their work and then they can't pay us or refuse to pay us. So we take a 50% deposit up front. It also means that then we've quoted the client so they know exactly what their fees are going to be. If we can't do that job in an efficient manner that we think we could have done it, we wear that cost. So if you've got a new consumer or you've got something that you need to deliver, that you need to pay for things in order to deliver it, consider doing a prepayment, which gives you the cash to buy the goods in that you need to do or to pay for the wages for something that you're going to deliver. Short-term loans are not great. Do not try to turn to short-term loans to cover a cash flow shortage. If you must do it, then that means that there's issues and you need to put something in place to stop that happening again. Because as I said, if you're trying to pay off short-term credit because you needed it for cash flow issues and you're trying to get out of your cash flow issues, it's a difficult cycle to break. If you are in that situation, you need to stop and do your budget, look at your pricing, look at your gross profit margins to work out where things are going wrong. Of course, I'm an accountant, so I'm going to say you need to have real-time accounting in process. Do not wait until you see your accountant in 12 or 18 months to find out that you have an issue that you should have known about back in July or back in August or whenever that is. You should be able to be looking at your cash flow on a weekly basis. I don't say look daily, but a weekly is a good thing. Some small businesses, I just say do it monthly, but for most people it should be a weekly. I projected to get this much cash in and I didn't. Why not? I projected that my cash going out would be this and it was more. How did that happen? What have we done wrong? It will help you identify any cash flow problems before it gets too far. Like if you can stop an issue happening in 1 week, it's much cheaper, much more relieving for you than to find out in 10 months' time that you had an issue with your cash flow or your pricing, or you weren't adding in a product new cost to your pricing model. So it is important that you are very much looking at your cash flow on a weekly basis, looking ahead at what you've got coming in the next week. Where does that fit with your budget that you did or your forecasting that you did earlier on? And remember, a forecast and your budget should not be sit down once a year and do the budget. We always do what we call a rolling budget and a rolling forecast. So as this month finishes, you do the next 12th month. So it should always be the month we're in plus the next projected 11. When this month finishes, you'll do the month we're in plus the next projected 11. That keeps you front of focus of your cash flow and your budgeting and your business's own financial health. And of course, my last thing, which you'll hear me bang on about all the time, and that is your mindset. Take a proactive stance with your mindset around money and cash flow and budgeting and all the other things. Make it a priority, because when you come in with a good mindset, you will look at things in a more positive manner. You will look at things as an opportunity for growth for you, and you will look at how you can be better at what you do in your business. So be creative. Look at ways that you can build the income in your business so that you are not putting so much pressure on your cash flow. I did a consult with one of my clients the other day, and I just said, just put something little. Everybody looks for the big spend, and she was a bakery, and I said, just put some little things that are only $1 on the register where people are. And supermarkets do this all the time. When you're standing in line in a supermarket and you're waiting for the next person's groceries to move along, have a look next time what's in front of you. It'll be the chocolate bars, it's the little single serves of nuts, it'll be the chewing gum. And when you're in that line at the end of the registers, you'll always find soft drinks, because when you're standing there, you've been pushing the trolley around, so many people will go, oh yeah, I am a bit thirsty. Remember that the thing that's in front of you will trigger a thought in your brain, because we're trained that way. Our brain works that way. So it sees a drink there and all of a sudden you're thirsty. It sees the chocolates there and all of a sudden that's what you feel like. So be creative with your business at how you can increase your income through a new product, a new service, or an upsell. But remember what I said in the podcast, do not do it in a salesy, sleazy way. Make sure what you're selling them is what they want or need or solves a problem. There can be other things that you can do. You can, if you've got a special skill, host a workshop. One of my clients that had a restaurant, they found a way to do had an Italian restaurant. They're both Italian trained chefs, and they did a workshop I think it was a Saturday, might have been a Sunday, on how to make gnocchi. And then they did another one on how to create the perfect pizza base, or they do those sorts of things because they have a skill that people want. So consider that as a way of increasing your cash flow as well. So the possibilities are endless at how you can make your business better at the inflow of cash and less of the outflow of cash. Cash is king, queen, and joker. So make sure that you keep up to date with your cash flow. Look at ways of forecasting your cash flow. And of course, if you need any help, join me over at Pathways to Profit, because this is part of that course that I will be teaching. If you know anybody or a small business that needs help, please let them know about our podcast and our website. My aim is to help 10,000 small businesses be better at business, and you can help me do that. If you want to follow me over on our socials, we're on all the different socials, and I often put tips and tricks and different templates up, so come join us there. If not, I'll see you next week on our podcast. Have a lovely week, and thank you for joining me today. Remember, the advice shared in Dollars and Dreams is general in nature, and it does not consider your own personal circumstances. Dollars and Dreams is for educational purposes only and should not be relied upon to make investment or financial decisions. If you need more help, please reach out to a financial advisor for tailored personal advice. Don't forget to click that subscribe button so you don't miss out on future content. And please leave me a review. Your feedback really helps me to reach other people chasing their money dreams. You can find me over on Facebook and Instagram to connect with me. You will find the link in the bio, or head over to my website at jenrichardson.co, where you will find free content and learning tools.